there, folks. Welcome to a overview of the market profile. Due to a poll that we held, it seemed to be the slight nosed winner. Thank you guys. Note that we do listen to your suggestions and comments on several of our platforms. You can follow us over through Instagram and, of course, this YouTube, as well as coming through our Discord, and you can suggest things there as well. For future videos, make sure to comment, like, subscribe, and keep your notification bells on so you know when future videos come out. To start, we need to understand that the market profile is not a green red light sort of system. There is mental work that is required to use this effectively. You want to make sure that you're creative. We're going to be using it to sort of build out stories and scenarios, and if anything, the most important thing is they could probably keep you out of bad trades rather than looking to get you into trade. The market profile is arranged similar to like candlesticks. It's based in time, but what can be shown that candlesticks cannot is that it gets sorted out as histograms. We can use this as a visual graphic of the auction. Note that when viewing the market profile, we look to have a few main points. We use the open, shown in my chart as this green dashed line. Our close, this is red triangle. We have the point of control, which is the price, and in my set, I have it set to the price that has the most volume. That is our orange colored lettering that goes straight across. Our value area are these white dashed lines. That's sort of the 70% point of, again, where most of the volume had occurred surrounding the point of control. We want to also look for highs and lows, specifically also areas that sort of stand out. Like, and so we have this blocky zone, we have these nodes, areas that had no time spent. That's another point of interest that we can get into. And points where the prices kind of came down and flew up from it. Note that this is not a trading system. I'm going to reiterate this as well, because it's just an organization method. It's not telling us where to buy, where to sell. It's just telling us how people sort of behaved when it got into certain prices. So we want to use that information to sort of gain like an understanding of the story that's unfolding in front of us, which will help us clue into knowing which side has, in the short term and sometimes the medium term, the strength to push the market in a certain direction. This is effective in that if you are intending to be even using this for scalping or placing longer holding trades, it's good to know that if you get a chance to scalp, that you're pushing your prices long, and knowing that any shorts you might take might not be as long lived. Or the opposite of that, of being a directional, you would want to know, if you're scalping, that you have the opportunity to play both sides of the spread as it sort of cycles around, building out time in a certain area. That's why we get these sort of chunky looking profiles. We want to know that this isn't areas of prices being overbought or prices being oversold. You have to look at it like an auction. where if you were to go and place bids and offers, at some point things start to dry up when we are trading higher. Interest starts to wane, and we get this exhaustion. That's one main point, is the profile identifies exhaustion very visually, and you get these slopes. We want to know where prices were accepted. We know for sure that in this area, prices were known to be trading back and forth. As they built out the point of control and they built out the volume, we know that at that point in time, the prices were accepted when they had come falling down. And we need to also know rejection. What prices were not favorable? As we came down, we knew that this prices were rejected away. And we can open it up to give you more clarity. As we came down, we rejected away, and we built out this prices. That is the three main points, which are exhaustion. As prices moved up, we couldn't get any more favorable trades. Acceptance, our fat little nodes. And then rejection, points where prices did not agree to trade into. It can also be shown within the profile as these little nodes we mentioned earlier that were missing. Knowing these three main points helps us do two things. It helps us identify whether the market is in a state of balance or in a state of imbalance. Looking at this recent profile, we know that at this point in time, they were balancing. It was a balanced day. A very wide balanced day relative to how this is the bonds, how that tends to trade. But we knew that there was some sort of balance. And that kind of information can kind of clue us into the possibility of when we'll start to do the second thing, which is to imbalance. So that can be either within the day or throughout a session. As we pull out, we note that we had this area. The prices were sort of balancing in. That can be shown by how the volume sort of stacked up throughout this period of time. And we began to imbalance on this day. And parts of this day, though, it slowly creeped back in. You can note that we came up. We had then some rejection when we opened below. And it imbalanced down, followed by the next day, where now we're starting to balance again, where it begins to get this chop be looked to it. And so what this can do for you is it kind of clues you in coming into the next session. What could be the next steps? Do we continue to build out lower? Or do we begin to creep back higher? Those are your key points. The information that this can provide for you that generic indicators really can't. And so if you're going to be trading directionally, that's the information you need to know. You need to know that. You need to know what are your probabilities. What are the chances that we just continue to chop down here and build value outs, providing, in my opinion, optimal conditions for scalping? Or do we look to maybe even spike lower till we get a point where we reach prices that buyers decide is no longer something they like? Or sorry, sellers no longer try to sell lower. And then that becomes an exhaustion point that buyers can then bring prices back up into this point. And if buyers start to gain the strength, knowing that sellers are no longer interested in lower prices, they could push prices back up into other areas of short-term bounds. We have that point, this point, and all this volume node created a huge view. And so with most people, they view the market profile on solely time. But it's important to know that when the market profile had been created originally by Dalton and Stedelmeyer, they were using the 30-minute periods to sort of approximate what was the volume coming in. And now with computer-based trading, we know volume. We see that the tools provided to us now have volume included. And so in that sort of information, you know that sort of takes more priority, because that showed where actual transactions occurred. So that's why I tend to keep my profiles based on volume, both in the point of control coloring and the value area based around volume. But it's important to have the time so you can plan out your probabilities. So if I were to be going in to this period recently, and you see that prices were trading lower because we did gap down, as it came down, we wait to the next period to see if this is something that's either a trend, or because we have gone down so much, if this starts to become an area that becomes balanced. Clearly, knowing this in hindsight, it did become as a balanced zone. But within the day, you wouldn't have seen that. You would have seen it come down, and then on the fourth period, it opens up, goes through towards the upside, retraces that back, breaking that low, but we're not breaking lows from earlier of the C. And we come back up, trade higher, come down, and it just begins to chop. We get a few periods of where prices attempted to shoot up higher and were rejected, finishing up the session in the middle. So knowing this information, knowing that we attempted higher to get maybe back into this sort of node of time and volume, we can maybe come into the session on the following day that if prices are unable to trade past this point, that we have probabilities of trading lower, if not to just chop more into this zone. And that's the sort of skill set that you begin to practice forming, is being able to take maybe a day and just watch and take notes of how the market is reacting at certain prices, and looking to then build out scenarios for yourself of if-then sort of statements, where if prices do this, then I can look to trade this way. Thank you for this viewing of our quick overview with market profile. We will look to do more in-depth videos regarding this in the coming days. We just wanted to do a quick touch point to let those know that from the poll we had set, this was our winner. Please make sure to, of course, keep that notification bell on and subscribe so that you know that if this is something you're interested in, you'll know when the next videos start coming out. Thank you, and we'll see you again next time.